this company could be justified as this valuation if it continues to introduce new technologies and if it conceivably takes over gigantic share. And I think it's an interesting dichotomy that the people who on Wall Street who don't drive Teslas think it's overvalued, and the people who drive Teslas, who are very smart people, think, hey, wait a second, just let it run.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to a few clips from a great recent interview that Rob Maurer over at Tesla Daily / The Street did again with Jim Cramer, who now, as we know, has become a massive Tesla believer. But as we'll see, Jim's understanding of Tesla is quite broad and cursory. He hasn't gone super deep and down the same rabbit holes that most of you guys watching will have. So it's going to be great to be a fly on the wall as he goes deeper, asks some questions, and then to see how he reacts to those new insights. So let's see what happened. But first, hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it.
I have to tell you, we did a piece last week, and I've been doing Twitter since 2009. I've been commenting on many different stocks since 1984, writing. This was the greatest outpouring I've ever seen.
Whoa, Jim, slow down. Did you just say that in the last, 35 years of writing about stocks, and in the last 10 plus years of the social media Twitterverse being there, this is the greatest single outpouring about anything? Dude, that is huge. This matters. This is massive. Jim is very excited, not only about Tesla the stock, but what has happened now, this little crossover, this format. I personally commented on Jim's tweet. I'll put that up on screen when I edit this for you guys. See what I mean? This is the kind of thing. Jim wasn't performing for like a CNBS audience, right? This was a long format, in-depth, intelligent discussion. It was mature. They weren't pandering to a certain audience. It was just real people just talking, chatting, learning, gaining some insight, sharing some thoughts and their perspectives. This was really powerful. Jim's response and the fact that we've seen him go back and already within a week or so of this original interview talk again to Rob Maurer shows that something's happening here, guys. Keep in mind, Jim is from an entirely different world, okay? The guy's a centimillionaire. He's from the Wall Street world. Many of the insights that we know, the things that have been obvious for months or even years about Tesla, Jim probably still isn't even aware of. So this is a really important moment we're seeing unfold.
I think a lot of it was because it was not hit and run. It was thought out. And it's because you are, I think, the best expert I've heard on this.
That is some almighty high praise from Cramer. And remember, this crossover moment, the bridge has formed between retail and Wall Street, mainstream finance, media and investors who just do their own diligence and don't really care about what everyone else is saying. And the praise is completely on point. Rob Maurer really knows his Tesla shit. Let me know in the comments below if you guys watch Tesla Daily. And if you don't, why the fuck not?
Which is why when I saw the Wedbush piece saying China growth trajectory robust and battery day key equals 3,500 new bull case, and then I saw the stock was down, I said, for those who really love Tesla, it's better to buy something when it's down than when it's flying. So I wanted to ask you, first, what's the credibility of Daniel Ives, given the fact that he has a bull case and he's neutral? And second, does he have any sort of insight that others don't?
This is a real fly on the wall moment. Cramer's basically saying, heard this analyst who upgraded the stock, don't know anything about the dude. Over to you, expert. Does this guy know what he's talking about? This is a really, really amazing process that we're seeing unfold here. Cramer's literally educating himself about things relevant to understanding Tesla better. And as he understands Tesla better, he'll be able to better explain his thesis and expand on some of those points and either sway to even more bullish or even more bearish based on his new knowledge and insight. This is really fun to watch. Remember, Cramer has a massive mainstream audience and a lot of influence, so his opinions can sway those of others and cause a lot of retail investors to enter or exit stocks just based around how he feels about the company. And as I've said in the past, with Tesla, the deeper you go, the better things look.
Yeah, so I think on Wedbush, Dan Ives is definitely a very respected analyst among Wall Street. I think there's a website that ranks analysts based on their calls out there, Tip Ranks, and he's in the top, couple percent of analysts on that website. So he definitely does a good job. He's covered Tesla well. In terms of his note this morning and specifically the comments on China, that's definitely accurate. China is hitting a production run rate of 150,000 units per year right now. And that's actually a bit understated. Over the last couple of months, Tesla has registered about 26,500 vehicles in China. So if we extrapolate that to an annual run rate, that's about 160,000. So even over the last couple of months, Tesla has already been there. And in their Q2 update letter, they said that they're going to hit 200,000 production run rate in China, Shanghai, in the middle of 2020. So that's where we are right now. And Tesla's already ahead of that 150,000 from Dan's note this morning.
This is the so-called million-mile battery, of which some wag said to me this weekend who loved our podcast, don't you realize if there's a million-mile battery, no one will ever get a new Tesla? So the idea that you buy a GM car and 4 years later you buy a new GM car is out. He will make it so his cars are never traded in. And I thought that you could address both the battery issue and that complaint.
Just want to chime in here on the battery life scenario because this actually came up in one of my exclusive Patreon Q&As a few weeks ago, and I discussed in detail my thoughts around this. I have a feeling that in the future, what's going to happen is people will select a battery for their Tesla. Maybe after battery day, we'll hear about a bifurcation of different battery chemistries. You can choose a long life, low energy density, or you can have high energy density, less life cycles. So maybe if you're getting a performance vehicle, you choose that. But in either of these cases, it's likely that in the future, you'll actually take your battery from your existing vehicle and move it into a new body in the future because the battery is going to last for a lifetime unless you're using a vehicle as a robo-taxi. So imagine this, 20, 30, 40 years, you're still taking that original battery pack from your vehicle into the body of the latest car, the latest autonomous vehicle, because that battery pack is going to hold its value and its utility. And clearly it's going to be useful in the future. Once you've used a lifetime or 10, 20 years of that battery in a car, so to speak, robo-taxi, whatever you want to call these new things, electric vehicles, computers on wheels, maybe that goes into stationary storage in your home. So you'll actually take your vehicle's battery pack in the future and put it in your home. So this is one of the ways that I see this scenario for battery life actually playing out in the cases they're not used in robo-taxis. But of course, in a robo-taxi, it's going to be used very quickly because it's in high utilization.
Yeah, so we'll start with the million-mile battery. I think we touched on it last week, but essentially a million-mile battery just means that for the life of the car, it can, instead of going 150,000, 200,000 miles, it can last a million miles. So you're going to get 5 times the amount of utilization. For a normal use case, that would imply that the vehicle could last 40, 50 years. Obviously, people aren't going to keep their vehicle that long, but Tesla's really pushing for this because they envision an electric robo-taxi type of environment someday where the utilization of vehicles is higher and maybe they're traveling 50,000 miles a year or 100,000 miles a year instead of the usual 10 to 15,000. So that's really why Tesla's pushing for the longevity in terms of the battery life on not having to replace your Tesla every 4 years. I think that's an interesting consideration. And something we also talked about last week is that Tesla just doesn't really care about stuff like that. They're really just focused on providing as much value as they can to the end customer. And they believe that that is the path to success rather than, building in margin from service or building in margin from vehicle turnover year to year. And Tesla right now is in a position where they can, they don't have to plan for things like that because their market share is so small. There's so much market yet for them to grab that they don't need to worry so much about making sure their customers are coming back every 4 years. It's just not important to their business yet.
So for those who don't know, traditional automakers tend to make a lot of their actual profits on parts and service after the fact. They're engineering stuff that's going to break over time, whether intentionally or just by the fact there's a billion moving parts in the internal combustion engine vehicle, approximately. The point here is that a Tesla is a much better value proposition to the customer. And if anyone has any concerns about Tesla, oh no, they won't get all that future revenue like all the other automakers. There's the software component, and I could keep going down this rabbit hole. There's plenty of other additional revenue streams that Tesla can turn on in the future from existing customers. They're purchasing infotainment apps. Remember, they're going to solve autonomous driving in the future. That screen suddenly is going to become the focal point of the vehicle. You don't need to pay attention to the road. You're going to be downloading apps, playing games, doing work, productivity. Who knows what else you'll be getting up to in there as well. And as Rob points out, Tesla has plenty of room to grow. This year, they'll probably deliver about 0.5 or 0.6 of all the new vehicles sold on planet Earth. And as we know, in the future, 100% of new vehicles will be electric. So there is plenty of room to grow.
I think that one of the great reasons why Tesla is up is Tesla shares Apple's view, which is that, look, we'll put it out when it's great. And that's what converted me to Tesla. There's a guy on Twitter that says, well, you've always hated Tesla. I said, well, I've hated Tesla except for the last 1,800 points. Okay. Now, let me ask you this. When we look at, this is a very complex question that I got when I was on the beat, so to speak. I was saying, look, this company could be justified as this valuation if it continues to introduce new technologies, and if it conceivably takes over gigantic share. I love what you just said, which is it's really very small right now. There's a lot to grow. But then the comeback was, oh, Jim, please. I mean, it can't get up to where Ford is in terms of the number of cars. And I said, it will get up to where it has to go. The guy's just trying to meet the demand. I mean, am I wrong about this?
No, I completely agree with that train of thought. I think there's no reason to assume that Tesla can't get to that market share without, providing some sort of backing analysis to it. I think Tesla has shown in the markets that they've played in with the Model 3, the Model S, the Model X, they've been able to be the market share leader. And Tesla's goal is to continue to make their cars more affordable and enter higher volume segments. So, based on the track record we have of Tesla entering a new market and dominating it, I don't see any reason for that to necessarily change as Tesla continues to make their vehicles more affordable and continue to provide that amazing value proposition that we talked about.
For the record, guys, I would be absolutely astonished if in 2030, Tesla isn't selling at least 10 million vehicles per year. And that's the absolute worst case scenario, at least 10 million. And the only reason that it's that low is if there's going to be some displacement of new vehicle purchases because of autonomous vehicles, meaning less people are actually buying new vehicles. They'd much rather just use a ride-hailing service, hail down an autonomous vehicle when they need one because it'll be much cheaper.
All right, let me just circle back one more time to China. I'm reading that China this weekend, Shanghai wide open for business, Beijing, Wuhan area wide open, which leads me to believe that they could have whatever Tesla makes, they can sell. So that leads me to the next thing, which is that at what point does he expand capacity?
Yeah, that's a great point that I wanted to also address. So I think one of the most exciting things about Gigafactory Shanghai is the implication for the rest of Tesla's business outside of China. They went from breaking ground in Shanghai to actually producing vehicles in just 10 months. And now we're about 18 months past that breaking ground point. And as we talked about, they're approaching a production rate of 200,000 vehicles per year. So that speed of production, getting to production and ramping up production is pretty unprecedented. To my knowledge, I don't have another instance of anything like that ever happening before. And what that shows is how quickly Tesla can expand. So right now they have Gigafactory Berlin in construction. They have Gigafactory Texas in construction. Berlin broke ground about 3 months ago. Texas broke ground earlier this month. So if we fast forward 10 months and Tesla can even achieve the same timeline that they achieved in Shanghai on those two factories, we could be looking at Tesla's production capacity next year, towards the end of next year, already being at about 1.3 million vehicles in terms of the run rate at the end of the year. And if we go back to Dan Ives' note, I think, analysts are in general pretty conservative on Tesla's growth rate. Dan Ives, for example, in his base case, so his $1,900 price target, he is forecasting Tesla's deliveries in 2025 to be 1.3 million vehicles. And Tesla has the potential to be at that capacity at the end of 2021.
Rob makes a great point here. Many analysts, most analysts, and plenty of retail investors too, just cannot fathom the rate of expansion in Tesla's production capacity that they're actually aiming for. But the logic checks out if you think about it. Look at the side plans, guys. Here's some homework. Go and have a look at the initial stage of Gigafactory Berlin, and then look at the size of the entire site and some of the other plans that were lodged. You'll realize that this facility actually has the capacity to expand. And of course, the site for the Austin, Texas Gigafactory is absolutely fucking enormous. So based on demand for Cybertruck, Model Y, and who knows what else, Tesla could scale up their production capacity at that place basically infinitely. So even without the need to build additional factories, just by expanding on their existing sites, Tesla can massively increase their production capacity after they've already built out the first stages of Berlin and Texas.
Look, you've answered all the things that I'm interested in. I'm anxious to get this out because your following is immense, and I want the people who follow me on the street to know about your stuff, because it's the first time I've ever had the context.
Incredibly high and well-deserved praise there. As I said earlier, we really are seeing a bridge built between two worlds, the retail investor and the mainstream finance media / Wall Street. This is really important. It means there's going to be much more reasonable conversations held in the mainstream media regarding Tesla. At the moment, most of the analysts covering Tesla are automotive analysts, which means they know absolutely fucking nothing about the company because they're not an automotive company. And there's a whole other subset of analysts and commentators and shorts and bears out there who honestly, if I'm being real, I think they're just projecting their own insecurities. They feel inferior compared to Elon Musk. They're jealous. They're envious. he's weirdo, he's not like them, he's probably on the autism spectrum. Now they're trying to find a way to bring this guy down because he makes them inferior. How can this guy who's so different, who's so weird, who says strange stuff and laughs at memes on the internet possibly be building a successful company? I've got to find a way this is wrong. Maybe it's accounting fraud, maybe he's a fraud, maybe he's a liar, maybe they're making up financials. I don't know what they're doing, but I've got to bring them down. There's no way this can be successful. Some of that BS now is going to get cut through because Cramer is connected to the real world, what's actually happening, some real genuine insight, not hearsay, not gossip, not rumor, not emotions, not projection of insecurity, but actual reality. This matters.
I don't know Dan Ives. I only know people who think that the stock is way overvalued, except for the people who introduced me to the car. And I think it's an interesting dichotomy that the people who on Wall Street who don't drive Teslas think it's overvalued, and the people who drive Teslas, who are very smart people, think, hey, wait a second, just let it run.
An important observation there from Cramer. There seems to be two groups of people who talk about Tesla. Those who understand Tesla / have actually experienced the products, and those who don't understand Tesla / haven't experienced the products. And yes, those two seem to be intertwined. I can't wait to watch more of this Cramer education story unfolding, being a fly on the wall. Rob's doing a great service to all Tesla shareholders, I think, by opening the eyes of Jim Cramer and making this connection between retail investors and the mainstream finance world. There's a link in the description to the original video, guys. Check it out if you haven't already. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And of course, don't forget your free stocks with WeBull. If you're in the US, you can start a new account with WeBull using my link below. Deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, New Zealand, or the UK, you can get a free stock using the link in the description to stake.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.